Cryptocurrency is a new kind of money. It's digital and uses cryptography for security. Bitcoin is the most famous cryptocurrency. Ethereum is another popular choice. There are thousands of cryptocurrencies. They work on a technology called blockchain. Blockchain is like a public ledger that tracks all transactions. This makes crypto transparent and secure. Cryptocurrencies are decentralized. This means they are not controlled by governments or banks. This makes them attractive to some investors. They offer a different way to think about money. Cryptocurrencies can be volatile. Their prices can go up and down quickly. This makes them risky, but also potentially profitable. Many factors influence crypto prices. These include news, regulations, and market sentiment. Traders use charts to understand price movements. Candlestick charts are a popular choice. They show the price action of an asset over time. Each candlestick represents a specific time frame. This could be 1 minute, 1 hour, or 1 day. A candlestick has a body and wicks. The body shows the opening and closing prices. A green body means the price went up. A red body means the price went down. The wicks show the high and low prices during that time frame. Candlestick charts help traders spot trends. They can see if a price is going up, down, or sideways. Traders use this information to make trading decisions. They can identify potential buying or selling opportunities. Understanding candlestick charts is essential. It's like learning the language of the market. Once you understand the language, you can read the story. Candlestick patterns are formations of candles. They provide clues about future price movements. Some patterns suggest a price increase. These are called bullish patterns. Others suggest a price decrease. These are called bearish patterns. A hammer is a bullish pattern. It has a small body and a long lower wick. It suggests buyers are stepping in. A shooting star is a bearish pattern. It has a small body and a long upper wick. It suggests sellers are taking control. There are many candlestick patterns. Each has a unique meaning. Some patterns are more reliable than others. It's important to consider other factors too. These include volume, trends, and market indicators. Learning candlestick patterns takes time and practice, but it can be a valuable tool for traders. By recognizing these patterns, traders can make more informed decisions. Crypto trading is buying and selling cryptocurrencies. Traders aim to buy low and sell high. They use exchanges to trade crypto. Binance and Coinbase are two popular examples. There are different ways to trade crypto. Spot trading is buying and selling for immediate delivery. Margin trading uses borrowed funds to amplify profits and losses. Futures trading involves speculating on future price movements. Traders use different order types. A market order executes a trade at the current price. A limit order sets a specific price for the trade. Stop-loss orders limit potential losses. Trading crypto can be risky. It's important to understand the risks involved. Start small and learn as you go. Use risk management tools to protect your capital.